5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stocks on track for their longest stretch of weekly gains since 2023 on optimism over AI and that potential Iran peace deal. The Pentagon mulling scrapping a loan offer to a rare earths refiner that aimed to counter China's dominance in critical minerals. And Kevin Warsh to be officially sworn in as Fed chair later today, a first-of-a-kind ceremony. Let's get a check on markets around the world, though. Let's get first over to Asia and Alice French. Alice.
Good morning. We've had another day in the green here in Asia with the Nikkei and the Taiwanese exchange both closing at record highs. The AI theme going strong. We've seen names like SoftBank, TSMC, MediaTek really rallying today. Here in Japan as well, Kawasaki Heavy coming out with a collaboration with Nvidia that really helped a rally. Now, of course, we are heading into a three-day weekend in the US and across some of Europe, and the yen is somewhat of a concern. You can see it's hovering there around the 159 level against the dollar, and we know that the last time there was a public holiday, slightly smaller liquidity, that the government did intervene. It spent around $63 billion to prop up the yen, and there is a risk of that happening again on Monday, so let's see.
Yeah, those currency traders really keeping that yen above the 159 mark the last couple of days. Alice, thank you so much. That was Alice French. In Europe, we are managing to eke out a gain, believe it or not, this Friday. The stocks Europe 600 up almost 0.5%. But according to strategists we surveyed, that might be basically it for the year. 16 of them, the average call is for the stocks Europe 600 to rise less than 1% from where we are now. The two-year yield in Britain off a little bit from where it was, but we're still good 60 basis points above the benchmark rate there at 4.34 right now, and the market really voicing the need or the want for the Bank of England to hike rates twice this year, at least as of current market pricing. And then we got some doomsday scenario retail sales with them falling the fastest pace in a year, so that has pressure on sterling. Motor oil in particular is down about 10%. That's petrol as opposed to motor oil. Brent crude here is up about 3%, but we're still going to see a loss for the week. We're just below $106 a barrel, but of course that relief is keeping futures higher and stocks propped up. And DataTrack says with the VIX at these levels, we may not actually be in frothy territory, but then again, it's the chicken and the egg scenario, right? That is a look at your markets. This is the bond picture. The 30-year yield well below 5.10 again, and the two-year yield just below 4.08. So we are calming down just a little bit in the bond market. All right, let's get to some individual market movers now, and for that we'll go to London and Charlie Wells. Charlie.
Good morning, Vonnie. So we're keeping an eye on some of these quantum computing stocks this morning because of investment from the U.S. government yesterday in a number of these. Now, we're seeing some positive sentiment around companies like D-Wave Quantum. They got a boost, along with the likes of IBM and a number of others. Let's flip and take a look at Estee Lauder, or Workday, which is getting a boost this morning, significant on the back of really strong earnings and an outlook that analysts like. Let's flip and get to Estee, which I've clearly been wanting to talk about this morning. This is a tie-up that has fallen apart between Estee Lauder and Puig. Analysts did not want to see this go ahead. They did not like the idea, as Estee is in the midst of a turnaround itself, up this morning nearly 10%. Let's end looking at Puig. That is the Spanish fragrance company that will not be tied up with Estee. They are down some 13% this morning because of the price that Estee was looking to acquire it at. They had been trading at that. So again, negative sentiment around Puig this morning.
All right, Charlie, thank you so much. Charlie Wells there in London. And coming up this hour, we're going to be speaking to JPMorgan's Priya Misra. There's Kevin Warsh set to be sworn in a first-of-its-kind ceremony as Fed chair later today. The attack on a nuclear power plant in the UAE earlier this week, raising fears about the scope of Iran's retaliation to U.S. strikes as peace talks apparently drag on. U.S. Secretary of State Marco Rubio telling reporters earlier the two sides have made slight progress. Joining us now in Dubai is Bloomberg's Abir Abu Omar. So, Abir, slight progress according to Marco Rubio. Yesterday we heard from the Iranians that some of the gaps were at least partially bridged, but the main areas of contention are still there, right?
Yeah, good morning, Vonnie. So the main areas of contentions are two, right? One is the state of the Strait of Hormuz, and then the other is the highly enriched uranium in Iran. So what we know as of now is not very different from yesterday. Iran did say through semi-official media that the latest proposal from the United States did bridge some gaps, or to some extent bridged some gaps. But those 2 points are ultimately the most important ones, right? So the Strait of Hormuz, Iran is considering now tolling it. As a matter of fact, we spoke to the Iranian ambassador to France. Bloomberg News spoke to him exclusively, and he said that along with Oman, who, if you remember, Vani, were also part of the mediation talks before this whole war started, are considering tolling the Strait of Hormuz. Now, that is something that both Persian Gulf countries and the United States are not going to agree to. And then the second point is, we heard through a Reuters report that the new Supreme Leader in Iran, Mujtaba Khomeini, is sending a directive that disallows the highly enriched uranium that is now weapons making to be sent outside of the country. And that is yet another thing that the United States is not going to agree on. We heard President Trump say that he wants the Strait of Hormuz to remain open, to remain free, and not to be tolled. Secretary of State Rubio also said that if that was what Iran was going to respond with, tolling the Strait of Hormuz, that would make the deal unfeasible. So those same points still exist between the two of them.
Abir, how are investors reacting? How should they react to the latest back and forth? And are they changing their behavior at all in the last week or two?
Yeah, look, so essentially what we know between the two parties right now is that the markets are essentially reacting in a way that doesn't really understand what is happening. So you can see that reflective in Brent prices. Brent is about $105, $106 a barrel. The weekly trajectory of Brent is a decline, but today it's up around 3%. Same thing is happening in equities, right, or in broader risk assets. What we're seeing is the return of geopolitics to equities. Our own strategists say that both oil and rates are the 2 points that will bring conviction to markets again, or the removal of volatility in those will bring conviction to markets. And those are 2 risk assets that we're looking at that have risks stemming out of the region. So we're still waiting to see what Iran responds with, essentially, Vani.
All right, Abir, thank you so much. Abir Abu Omar there in Dubai. Bloomberg is learning that the Pentagon is considering scrapping an $80 million conditional loan offer to rare earths refiner ReElement Technologies. It's part of a bigger agreement that aims to help break China's dominance in critical minerals around the world. Joining us now is Rana Sajedi of Bloomberg Economics. How critical is this particular loan, and why is the Pentagon considering not offering it now?
Good morning. So this loan is one of a series of projects and different financing projects that the US government as a whole, and a lot of it going through the Pentagon, have been trying to kind of create to eventually, over time, increase the US's own capacity to mine and produce rare earths and try to reduce China's chokehold on rare earths. So we estimate that 90, 95, sometimes in some cases 99% of global mining and processing of rare earths, creation of permanent magnets from rare earths, which are used heavily in various industrial processes, or comes through China or depends on China somewhere in the supply chain. And that's created a really strong chokehold, and it's become, not just for the US, but globally in Europe and other regions, a priority to try to increase their own capacity to create those rare earth magnets. And this is one of those. And the Pentagon decision seems to be really more kind of in the nitty-gritty of this particular deal, this particular company. But you can see from the response from the White House that clashes with their broader strategy of really trying to put these measures in place.
And I should say the CEO of of ReElement, Mark Jensen, didn't speak to this particular disagreement, but said the company is going ahead with a facility in Indiana to refine critical minerals. I want to ask you about something that came out this morning as well. China restricting more chemicals. It's essentially helping the US in terms of its fentanyl crackdown. Can you give us the context?
Yes, absolutely. So this is really the other side of this US-China trade war and where we've got to in a year or over a year into Trump's second presidency. So if we remember in February last year and quite soon after the President Trump's second inauguration, he started to put tariffs specifically on China related to fentanyl. And so the idea was that the logic behind these and the reasoning behind these tariffs, which went from 10 to 20% blanket on all imports from China, the logic was that China is a key point in the global trafficking of fentanyl and opioids that ends up in the US and causes obviously a lot of social damage. And that was this kind of latest news is really a signal that China is meeting some of those requirements that Trump has set out and the White House has set out to show and really symbolize that they are taking those seriously, that they are putting their own restrictions and measures in place to try to curb this global fentanyl trafficking.
All right, Rana, thank you so much. That is Rana Sajedi of Bloomberg Economics. Now to other top stories trending on the terminal this morning. Chinese regulators are scrutinising recent stock rallies that were fueled by AI optimism. According to sources, some listed companies and funds have been asked to give more details on their approach to AI. The move highlights China's unease with some wild stock moves that have come with the AI boom. President Donald Trump is sending 5,000 additional troops to Poland, reversing course on a plan to suspend an army deployment to the country. NATO Secretary General Mark Rutte welcomed the decision. Sweden's foreign minister says the White House shifts are confusing and, quote, not easy to navigate. And Argentine football star Lionel Messi has joined a new club, the Billionaire Club. Messi's career skyrocketed after he received growth hormone treatment way back in his teens as part of his FC Barcelona contract. According to Bloomberg analysis, he's earned more than $700 million alone in salary and bonuses since 2007. Coming up, Puig shares sinking, the most on record after merger talks with Estee Lauder fall through. We'll have more. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. A multi-billion-dollar deal falling apart and hitting Spanish retail group Puig Brands with a double-digit drop. Merger talks with Estee Lauder failing. Bloomberg learning the discussions fell apart partially due to makeup artist Charlotte Tilbury's compensation demands. Bloomberg opinion columnist Andrea Felsted joins us now. Andrea, did Charlotte Tilbury just cause a 15% drop in a publicly traded company?
Well, it looks like it. It looks like that was one of the factors that contributed to the fall. Shareholders in Estee Lauder really didn't like this deal. So, you know, we'll have to find out what the main, sticking points were, whether it was Charlotte Tilbury or whether it was a broader unease. But, Puig shareholders obviously wanted this to go ahead. Estee Lauder shareholders didn't.
Yeah, and you can see that reflected in the stock prices. Will any other suitors come along that might fulfill Miss Tilbury's wishes?
Well, Puig is clearly in play. They will be clearly open to a deal. Estee Lauder too has been vulnerable potentially to a bid given its troubles. Now, I've always thought that Unilever was a potential buyer of either. I think more for Estee Lauder than Puig, but Unilever's just sold the remainder of its food business to McCormick, and shareholders don't like that either. So it's really got to prove that it can make that deal work before it goes ahead and buys something else.
Shifting a little bit to Richemont, full-year sales rose more than expected. What is Richemont doing? Other luxury retailers are having a difficult time of it, but it seems Richemont can really do no wrong.
Exactly. Richemont is really in the place to be. There's been a shift away from handbags and leather goods to jewellery because, ironically, handbags have gone up so much over the last 5 years that jewellery, a Cartier bracelet, actually looks better value for money until recently because the prices of gold escalating has had to be factored into those retail prices. Cartier watches are also doing really well. They are really, in the forefront of fashion. We've seen a move from chunky sports watches to smaller, more delicate, vintage-inspired pieces, and Cartier is really leading that charge.
Well, what stumped me was that there was a 17% sales increase in the Americas. Andrea, thank you so much. Bloomberg Opinions, Andrea Felsted. Staying on retail, Bloomberg's Francine Lacroix spoke with the CEO of one of the world's largest fast fashion conglomerates, Inditex, in an exclusive interview. Have a listen.
Diversification is one of the key strengths of the group. Diversification from the geographical perspective. We have physical stores in 98 different countries. Our online platforms are performing in 214 different markets, and we have 8 different brands. In the case of Lefties has been selling its own collections for women, for men, and for kids for over two decades, and expanding but basically mainly focus in Spain and Portugal. So expanding the brand to another markets where Inditex has already presence is the natural step for the brand.
Where will you expand it to? Because we're looking again at the geographies. I think 60% of stores that are outside Iberia are in the Middle East and North Africa for Lefties, compared to 5% for Zara. So again, how do you look at that mix going forward?
Well, we have plans for all of our brands expanding the presence, and in fact, even in our most mature markets, like Spain, we have plans for improving our physical store presence, combining with a strong performance of our online platforms. And to give you an exact example of Zara, this year we will open or totally refurbish some of our iconic and flagship stores in cities such as London, Rome, New York, or Shanghai. So many plans to keep on executing the selective growth that has been executed in previous years.
I mean, this is something that I find quite amazing, because you have these mega stores that, frankly, in London are often really, really full, where a lot of your rivals have gone online. So do you see that changing any time, or do people shop differently at Zara than they do for some of your rivals?
Well, in fact, that's one of the main changes in our industry in the last 2-3 decades. The online platforms. We have built a model that relies of the full integration. So the journey of our customers could go from the screen of the devices to a store, or from a store to the screen of the devices. So that's why we are looking for improving our commercial presence, larger stores, well located. And for us, the very positive performance of our online platforms is highly connected with the strong operational support that our online platforms are receiving from our stores. And on the other side, the online platforms are one of the main prescribers of our physical stores' performance. So you are right that change in the industry is leading us to look for better locations and larger stores in many cities.
I mean, there's a lot also that you try to do to try and put productivity higher, basically to keep margins higher. Is there anything that's still to be done in terms of automation, or how do you look at how much this will change, for example, the in-store online mix going forward?
Well, we are always trying to improve our operations, and for instance, we are in the process of implementing assisted checkouts that could help our customers to have a far better experience in our stores, avoiding some of pain points like queuing for the checkout, and it's performing very well. Right. And we are reinvesting all of the potential efficiencies, allocating our teams in order to provide our customers also a better experience, taking care of them and supporting them during the journey throughout our stores.
The Inditex CEO speaking exclusively there with Bloomberg's Francine Lacroix. Coming up, a look at what's making news in your front page headlines. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the New York Times, House Republican leaders scrapping a planned vote on a measure to direct President Trump to end the Iran war or win authorization for it. The Times says party defections and absences made it clear the GOP lacked the votes to defeat the measure. It's a striking setback, says the Times, exposing fractures within the party over the war. Next up on the Washington Post's front page, the Senate GOP delaying a vote on ICE money over frustration with President Trump's $1.8 billion so-called anti-weaponization fund. Senate Republicans peppered acting AG Todd Blanche with questions including who would be eligible for the money and what guardrails would exist to prevent people convicted of January 6th crimes from benefiting, according to the Post. And finally, the Financial Times reporting JPMorgan is looking to offload risk tied to more than $4 billion in loans to private equity funds. The FT says JPMorgan is in talks with investors over a transaction that would allow a transfer risk tied to so-called net asset value loans backed by PE fund assets. JPMorgan declined to comment. Let's have a look at your macro picture this Friday into a long weekend here in the United States with Memorial Day coming up. We have Brent crude trading up more than 3%, but still we're on track for a loss for the week. I mean, not quite clear why, because we're not seeing any movement really in the things that matter when it comes to US and Iran in that standoff. Futures pointed higher and the VIX below 17. Coming up, we'll catch up with Priya Misra of JPMorgan Asset Management. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stocks on track for their longest stretch of weekly gains since 2023. Optimism over AI and a potential Iran peace deal eventually playing into that. The Pentagon mulling scrapping a loan offer to a rare earths refiner that aimed to counter China's dominance in critical minerals. And Kevin Warsh set to be officially sworn in a first-of-its-kind ceremony as Fed chair later today. Let's take a look at these markets as we head into the long weekend. There does appear to be just a little jitterishness, if that's a word, in the oil market, but then again, we are on track for a weekly loss. So we're still hanging out around the 106 mark on Brent. WTI is just under 100. Futures pointing higher. Again, it would be an 8th week of gains for futures. We've had a bang-up earnings season, and there just seems to be continuous positive news. Yesterday it was the quantum stocks helping the indices. And then the VIX is just about at 17 now. We were below 17 a little bit earlier on. Let's take a look at bonds, because we're going to be talking about those in a moment with Priya Misra. We have unwound the move from last week to a certain extent, but we're still elevated. The 30-year yield at 507.95, down another basis point and a bit. And then the 2-year yield at 407.40, so still well above the benchmark rate. Let's get to some individual movers now. Over to London and Charlie Wells. Charlie.
Good morning, Vonnie. So we are taking a look at some of these quantum computing stocks this morning that really got a boost on news of investment from the United States in quantum computing. You're seeing the likes of D-Wave Quantum up some 2.4% this morning. So again, really strong optimism on this quantum computing sector. Let's flip and take a look at Workday, because they had a strong earnings report yesterday. They also gave an outlook that analysts like. They are really bullish on the case for AI at Workday, up well over 10% for Workday. Let's flip and end on Estee Lauder and Puig. This is a tie-up that has fallen apart between these consumer companies. And basically what we know is that analysts did not like Estee taking on Puig. So we're seeing relief in the market for Estee. Let's flip and look at the story for Puig, because it is a different one. They are down significantly this morning. Questions about their future trajectory, what they need to do to move on from this deal that has fallen apart.
Okay, Charlie, thank you so much. Charlie Wells there in London. JPMorgan's Priya Misra weighing in on the impact of a prolonged stalemate on the conflict in the Middle East, writing, quote, "We're at a tipping point, and unless the Strait of Hormuz opens soon and oil prices fall, we should start seeing the non-linear effects of higher oil prices on the consumer." I'm pleased to say Priya joins us now. She's portfolio manager at JPMorgan Asset Management. To some extent, it's a wonder we haven't seen it already, right, Priya? I mean, we saw UK retail sales. There was a 10% drop in motor fuel sales month over month. So Europe is seeing it a little bit more than the United States. When do we see it? How long more?
I think that's the key question. Now, what has actually helped the US consumers? We've had the tax refund. So I think you've had some fiscal stimulus come in. I think that's helped. The wealth effect has helped the upper part of the K. So even though you're paying more to fill your gas tank, you've got this, you're sort of feeling somewhat richer. I think that's helped. That runs out at some point. So we really need, the Strait to open. I think that's what we're watching. And along with that, I think this concern around, is there a spillover into other prices? Because gas prices, diesel, that's such a huge input. So I've been watching all the retail earnings this week. We haven't seen signs of that happening. Wage inflation is still not high. So I think that's why, I think there is this food and energy issue. But I think we haven't yet seen it into the rest of inflation. So I think we're sort of getting there in the next few months. If the Strait doesn't open, I do think the consumer, not just the lower part of the K, I think the upper part of the K starts to get impacted as well.
Well, for that to happen, we'd probably need to see stocks start to sell off a little bit, right? And we're not seeing that. The Dow hit a record yesterday, Priya. What does it take if this repricing didn't do it?
So I think the wealth effect, a large part of that is the AI. I mean, we're in this once in a generational sort of pickup in productivity. There's CapEx, there's spending. I think that can continue. That's actually not that interest rate sensitive. But I do think in the last week, I think it started sort of late, last week, the rate move is now starting to concern, maybe not still the AI stocks, but everything else. So we started to see, as the 10-year got above 450, 460, getting close to 470, you actually started to see the stock market start to pay attention. Because, when you're taking out rate cuts from the rates market, I think, the market can handle that. You start talking about rate hikes, I think, and you see this global impact. So if global rates are rising, we're talking about Fed hikes. The Fed doesn't just hike once. I think that's the concern. If the market starts to price in 2, 3, 4 rate hikes, I think then the broader market starts to worry, where's that interest rate? You're discounting cash flows at some interest rates. I think then stocks do start to worry. So that's why I think rates have now reached that danger zone. It's all been a real rate driven rate increase. So if rates continue to rise, I think that stock market, that wealth effect that has sort of helped the consumer, that starts to unravel a little, somewhat.
So we're definitely at the point with the FOMC that the easing bias is coming out, right? But are we at the point yet where there might be vocal support for a hike, given also that, Chair Warsh is going to be coming in?
Right. So, I think the easing bias is very likely to be taken off. I mean, we saw this in the minutes as well. I think that's already priced in. To your point about hikes, I think the Fed is in a really tough position. They're dealing with a stagflationary shock, and the starting point is not great because inflation has been above target now for 5 years. So I think they will want to buy time, but they realize that raising rates doesn't open the Strait of Hormuz. And, oil prices continue to rise. That hurts the consumer. Then you've got mortgage rates rising. So, I think for them to start talking about hikes, they have to see a sign of reacceleration in the labor market, in terms of, other inflation starting to pick up, as well as inflation expectations. We're not seeing that, so we don't think the Fed's likely to hike. But I think they stay on hold and they watch. They watch, and if in case you see signs of reacceleration beyond AI, I think that's when they hike.
How do you think the midterms affect the chances of a hike, though? Because on the one hand, the Fed won't want to be called political. On the other hand, we all know that there's already a little bit of a perfume of politicization at the Fed at the moment. Can they hike before the midterms?
So I think the Fed, there's been a lot of political talk around it, but they'll really look at the data. It is a committee, so you've got 12 members that vote, 19 others talk about it, they have comments. I don't think the midterm matters in terms of the optics around whether the Fed can hike if they have to hike. I think they're going to watch the data. If they see the spillover into inflation expectations, into core services, inflation picking up, into wages, I think then they hike. Where I think the midterm matters is, do we see any fiscal policy between now and the midterm? Is there any way to offset the oil shock? I think then that absolutely has an impact on the economy. So I am watching the politics of the midterms, but I don't think the Fed will do what they should do given the inflation backdrop.
So, Priya, we were in a range for the longest time on treasuries. You and me chatted many, many times during that period, and sure enough, they would always revert. Are we seeing a reversion this week after last week's price move, or are we in a new range now?
So I think the range is higher. You know, we were thinking 375, 4.25. Now we're thinking 4.5. So we've been above that range. What gives us comfort that there is still this range, that the upside is not 5%, is the fact that this was railway driven. Equities are paying attention. Financial conditions tightened. Now, not this week, but if you look at last Friday, you look at Monday, Tuesday, financial conditions were tightening. So that normally is telling you that the move is about to end. I think that's part of it. And global rates. A lot of the move, why we were stepping back, was if global rates are rising, that does have an impact on the US. You're seeing the impact of the oil shock on on European data. You talked about the UK data. I think as global rates stabilize, that actually can also help cap these 10-year US rates as well.
Investors are going to have to get used to a new style of communication, but maybe also new content in terms of communication. How are you looking for Kevin Warsh to communicate with the public?
He's talking about a regime change, so there's maybe a lot in here in terms of a new framework, in terms of communication. Does the dot plot stay? So we'll just watch. Every chair has an impact on communication. I think it might take some time because he has to win the hearts and minds of everybody at the FOMC. As long as they communicate the reaction function, that's what the market wants a sense of. As economic data comes in, how does this Fed interpret it? What do they do in terms of, policy? I think that's what I'll be watching. If the dot plot goes, that's fine, as long as we get maybe scenarios. So, just a better sense of the reaction function. More communication, I always think, is better because there's transparency. We understand how the market should respond to data. But we'll be watching because this is a new, chair with an idea to reform the Fed or have this regime change. So we'll just stay attuned.
Priya, we have to leave it there, unfortunately. But thank you so much for joining us in studio today. That is Priya Misra of JPMorgan Asset Management. Now to other top stories trending on the terminal this morning. An attack on a nuclear power plant in the UAE has raised fears about the scope of Iran's retaliation to a potential US resumption of strikes. The Sunday attack was launched from Iraq. Experts say the attack indicates the greater role Tehran-backed militias in Iraq are playing in the war. SpaceX scrubbed a crucial Starship test launch with just 40 seconds left in the countdown after again seeing that a pin holding the tower arm in place failed to retract. The delay comes just after SpaceX filed publicly for an IPO and unveiled billions in losses tied to its Starship, Starlink and AI ambitions. DeepSeek is prioritizing AI research over profits as it pursues a $10 billion funding round. Bloomberg sources say its founder told investors the company will keep developing open source AI models while pursuing a broader goal of achieving artificial general intelligence. Coming up, the Pentagon and White House clashing over a rare earths deal. More next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. The Pentagon and White House clashing over a rare earths deal. Sources telling Bloomberg the Defense Department is considering scrapping an $80 million conditional loan offer to rare earths refiner ReElement Technologies. Joining us now from Washington is Jonathan Tamari of Bloomberg Government. Jonathan, what's going on here? I mean, this is part of a massive outlay on the part of the government to get stakes in different companies. Why is the Pentagon balking at this particular one?
Yeah, we're seeing a clash between the White House that really wants to move fast on this. They want to develop the U.S. rare earth capabilities to counter China's control over those metals. And the Pentagon that's raising questions about whether this company ReElement is going to be able to scale its technology up, whether its revenue forecasts check out. And so they're kind of hitting the brakes a little bit. And the White House wants to hit the gas. Remember, this rare earths is what gave China the ability to fight back against President Trump's tariffs. And so they want to counter that and move quickly. So we're seeing a rare clash, really, within this administration.
Yeah, the Pentagon saying it's just doing its due diligence, and the CEO of the rare earths company saying they're going ahead in Indiana. He wouldn't comment on the actual scandal or disagreement, if you like. Now, about Trump deploying 5,000 troops to Poland, it's an abrupt U-turn. It's taking many in Europe by surprise, although the NATO Secretary General has welcomed it. Just give us the context. What's behind this, Jonathan?
So some of the context is the election of the new president there, Carol Naraki. It's someone who President Trump endorsed, and we know that the president makes a lot of these decisions based on personal factors, often much more than policy factors. He made tariff decisions after meeting with the King of England, for example, that really was not based in any specific policy, but they had a great meeting. We've seen many other examples like that. So it seems like this is more of a personal decision than a policy one, because they had really laid out the case for why they were going to not deploy these troops. Earlier, the Pentagon had said they weren't going to, that NATO, this was a message to NATO to, do more to defend itself. And here we are with the change. That election seems to be the big significant change that's changed course here.
Yeah, I mean, NATO had been bracing for cuts in military resources from the US. The ICE funding, is it in trouble for the administration, Jonathan? The $1.8 billion settlement fund is really irking many Senate Democrats and Republicans.
Yeah, I mean, this is a mess. This ICE funding, immigration enforcement funding that the Senate was supposed to pass seemed like a very easy lift for Republicans. They're doing it in a method that allows them to do it with only Republican votes. It's an issue that unites the entire party. But you had two things dropped onto it that have really caused problems. That settlement fund that you mentioned, and money for security around the president's White House ballroom project. And Republicans are looking at the midterm elections. They don't want to be on the hook for either of those things. They think both of them are going to be very unpopular with voters. And so it stopped the train that was moving down the tracks on this immigration enforcement funding. So the House has left, the Senate has left. They're going to be gone for the next week for the Memorial Day holiday. And they're still going to be left with this in their laps when they come back.
All right, Jonathan, thank you so much, and enjoy your Memorial Day holiday. That's Jonathan Tamari of Bloomberg Government. In Europe, Spanish retail group Puig Brands extending losses after deal talks with Estee Lauder fell through, nixing what would have created the world's largest fragrance and skincare company. Let's bring in Andrea Felstead of Bloomberg Opinion joining us. And Andrea, we're reporting that it was Charlotte Tilbury that made this deal fall apart. Tell us what happened.
Indeed, that does seem to be the report. There was a change of control clause which would have added to the cost of the deal, and that seems to have scuppered things. Whether that was the whole story, because this deal was pretty unpopular with Estee Lauder shareholders, and we've seen that the shares have risen strongly now that it's fallen apart, but that does seem to be the reason that is being reported.
So we'll see if anybody else comes along to court either of the companies. But I want to ask you about Richemont's full year sales, because it was massive. It rose more than expected. Shoppers splurging on, Van Cleef & Arpels brand diamonds and Cartier bracelets and rings and so on. Where's the money coming from, Andrea?
It's coming from the US. This has really been the driver of luxury sales. China is stabilising, but it's not yet recovered. But the melt up in stock markets until recently, Chairman Johann Rupert talked about some of the money that's being made by individuals in tech. That has all fed into sales in US luxury, and Richemont is in the right place to capitalise on that, because jewellery is the hot sector.
Yep, no more bags, as you say. Andrea, thank you so much. Bloomberg Opinions, Andrea Felstead. Football star Lionel Messi has joined his longtime rival Cristiano Ronaldo. Not where you think, though. He's become a sporting billionaire. That's the club he's joined. This is according to the Bloomberg Billionaires Index. Let's bring in Bloomberg's Rodrigo Orihuela for more. Rodrigo, what's so fascinating about this is that he's done it not by brand deals or sponsorships, although they've added, to his wealth, but it was basically salary and bonuses, right? How often has this happened in the past?
Yes, that is the unique aspect about this. It's he's unique, the same as Cristiano Ronaldo. They are both unique in that they have reached the status in activity while they're still playing. So that is quite unusual for the few athletes who have reached billionaire status. But the added uniqueness in Messi's case is the point that you're making, that he's done it through salaries. And something that's super interesting about this is that in 2023, he turned down a salary which was worth, a contract which was worth about 400 million to go play in Saudi Arabia. Cristiano Ronaldo did accept a salary in Saudi Arabia for about 250. And Messi instead went to the US. So on one hand, Cristiano's wealth was boosted by money straight linked to the contract from Saudi Arabia. He decided to go for a smaller paycheck, but one that also brought things like TV revenue sharing and equity options into a club. So he was more boosted by the tech and entertainment environment in the US that helped him get to this billionaire status.
Yeah, it's really fascinating how these stars are discussing money now. Apparently, as you mentioned, the TV streaming rights, there could be a revenue sharing deal with Apple, for example, on its MLS season pass streaming package, among other sort of creative ways of making money from his rights. But he's also buying up little pieces of clubs with an eye to perhaps what he might do after he stops playing full time.
Yes, that is an interesting aspect. It's becoming more and more common to see former footballers involved in club ownership. We recently had a case of a former Spanish captain buying or being one of the shareholders in a club here. Cristiano Ronaldo has made investments. In Messi's case, what he has done so far is either buy the full ownership or be a partner in ownership in two clubs, one in Uruguay with another former footballer, and another club in Spain. And in Argentina, where private ownership is not allowed of football clubs, he founded a club and his family runs it. So clearly he has got some strategy at the back of his head. The thing with Messi is that he does not like to talk about his businesses. He's only recently started saying that he's interested in business as a whole and that he's learning, and it may be something that he may focus on once he retires. But clearly he does have a plan, at least as far as the football clubs go.
Rodrigo, can you put it into context a little bit for us? I mean, back when David Beckham was playing, for example, would it ever have been possible for a footballer or any sports star to make $1 billion from just the playing alone?
No, so I think there's two aspects there. One is David Beckham himself is a very interesting character, because I do think as far as football players go, he took the marketing push and the marketing brand and strategy to a totally different level. And he happens to be a shareholder in Inter Miami. So the feeling from everybody who looks from outside is that clearly there are things that Messi can or must be learning from the Beckham brand, right? Because he's working there with somebody who has done it like nobody else and is a shareholder in the club where Messi plays. So that's point number one. Now, as far as players making that money, it would not have been possible. Messi, I mean, we've seen salaries for footballers have this huge inflation over the past 15 years. When Messi was in the late 2000s, Messi was paid about 12 million, and he was by far the best paid player on the Barcelona side. Today, there are at least 10 players who earn much more than that on Barcelona. So the salaries have changed a lot, and Beckham, played even earlier than that. He played in 2000.
Well, Rodrigo, I don't think I'm giving too much away by saying he deserves every cent of it. Bloomberg's Rodrigo Orihuela there. Thank you so much. Coming up, we're going to get you set up for your trading day. There's some economic data and the swearing in of a new Fed chair. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now, a look at what's ahead today. First up, we're going to hear from Fed Governor Chris Waller. That's at 10 a.m. Eastern. Then, President Trump is going to hold the first ever swearing-in ceremony for Fed Chair. Obviously, Kevin Warsh will become Fed Chair, sworn in at 11 a.m. And U.S. bond market closes early, 2 p.m. today, ahead of the Memorial Day weekend. So with your final trading day before the Memorial Day weekend, let's have a look at what's moving pre-market. So we have Futu Holdings. This story out of China, it's cracking down really on plans to penalize the firms such as Futu for operating on the mainland without a license, and you're seeing that with Up Fintech as well. Workday, another mover. It had results and they quieted fears about AI disruption for that name. Let's take a look at the macro picture as we head into our final trading session for this season before Memorial Day. Well, futures are higher. That's it for Bloomberg Brief.